Welcome to the Titans of Industry show. I'm here with Mr. Karl Denninger, a first-time guest at wealthresearchgroup.com, but certainly not a rookie investor, not a rookie commentator, or not a rookie financial analyst by any stretch of the imagination. Karl has a fascinating life story, very sound judgment. I absolutely love listening to him commentating because he has a very broad knowledge base, which is always important to work with. I constantly listen to many people that are talking with having just partial information about subjects, and it's very important to understand the amount of research that has to be done to really understand topics. And I'm very glad to be talking with Karl today. We're going to chat about many boring topics, so don't expect any sensationalistic projections. Instead, I want to talk to you about some ideas that make money and to talk about the present instead of the unknown future. So, Karl, first of all, thank you for clearing time today to be with us.
Oh, anytime at all. Thank you very much.
I want to start by talking about stocks. I've been an investor for 18 years now, since the age of 16. You might know this or not, but what happened to me personally is that my father went bankrupt when I was 13, and I just immediately started working for myself. And by the time I was 16, I actually, it was about the year 2000, I saved up about 20 grand back then, which would be like 50 grand today, right? From babysitting and doing all these jobs that you can do at the age of 13 to 16, and I got my parents to sign a waiver at the bank, and I started investing on my own. My grandfather gave me a couple of books about investing, and I've been investing ever since. And in 2008, when the collapse happened, I was actually river rafting in the Green River in Colorado for 4 days, and when I got my cell reception back, going back to civilization, I see that the world has crashed. Stock markets have crashed, but I wasn't part of the panic, right? I was just part of the outcome, and for some reason that helped me actually pull the trigger and buy stocks right after the crash and not be part of the sell-off. Yeah, you can call it luck or whatever it is, but that was a very important part of going all in 2009 on stocks instead of being part of the panic. And what I've done is throughout my career is focus on companies that have a long-standing record of raising dividends yearly for over a 20-year period. So these are companies that are able to have bigger and bigger profits every year, and it doesn't matter if the interest rates are going up or down or what's going on with competitors. They have a big enough competitive advantage that they're able to keep gushing cash and increase their margins, avoid making bad acquisitions, and use their earnings to buy back shares and time the count of the shares, which obviously is very beneficial. And in bull markets, obviously it's much easier to make 4 times your money on Intel or 3 times your money on Microsoft and Cisco. But it took guts to buy these companies in 2009 when they were very much discounted. Heck, Johnson has doubled in my portfolio since 2010. So these are very unusual returns on large companies, and now I'm making adjustments in order to prepare for a sideways market or even a bear market, short-lived or sustained. And I want to ask you, Karl, what are some of the best ways to move from being an aggressive investor at bull markets into a defensive investor in bear markets?
Well, I think you have to kind of outline your risk tolerance and where, what kind of money you're playing with, because there's 2 different aspects to this. There's the person who is essentially gambling, which is what most people are doing, even though they claim they're not. And that's especially true over the last 10 years or so, since the 2009 bottom. The problem we have with our perspective today, and it's something that most people, even the professionals who have been around a long time, simply don't understand. I mean, there's a few examples. Art Cashin's one of them, simply because he's old enough to have been around before we've been in the present environment. is that corporate leverage and thus returns, including the ability to pay dividends and buy back shares, has been driven by a secular bond market move from the upper left to the lower right in terms of yields. And what this means is that for the average company, which, by the way, if you look at the Fed Z1, corporate debt never went down even during the middle of the crash. Okay, they never actually increased their balance sheets. You've heard a lot of people talk about how corporate balance sheets are the healthiest they've ever been, and this sort of nonsense. It's a pure lie. If you take a look at the Fed Z1, at least in American companies, I don't have the data available for the international markets, but in America, there has not been one quarter when corporate leverage has actually decreased. And that's simply measured by corporate borrowing ex financials. So if you take financial products out of the mix, that is, all the crazy derivative games, they never slow down. And the reason for that is that in a declining rate environment, if you borrow $1 million at 10% interest, you need to come up with $100,000 a year in coupon in order to keep that $1 million out. The interest rate goes from 10% to 1% over a 30 or 40 year time frame. With some ups and downs in the middle, but that's the general trend, is upper left to lower right. You now can borrow $10 million with that same $100,000 coupon payment. And that's exactly what everybody has done. It's not just corporations, it's also governments. And the problem with this is that turning of the crank and equity valuations are entirely dependent upon that pattern continuing, because that's what produced the pattern. If you take bond rates on a general basis and you overlay them on the S&P 500, you will find an absolute inverse correlation. Now, of course, this is over long term. Okay, I mean, there are times that rates go up and there are times that rates go down, but this is the way it's been. That is now over, and there are two possible outcomes for this. One is a benign environment where you have a sideways market, and the reason is that rates essentially flatline here where they are. And that means that now you have to actually grow earnings. You cannot increase leverage as a way to get more bang for your buck, if you will. You must actually grow operating earnings. All right, and growing operating earnings is actually hard. You have to make more stuff and spend less money doing it. The other way that can happen, and the bad and malignant outcome, is that you get a sustained increase over time in interest rates. Now, the last time we had this happen was in the early 1980s after the oil shocks in America. And the result of that was a sideways to down market for 15 years. So this can happen again. And if it does, you're going to have all of these firms that took on this leverage go bankrupt, because they will not be able to refinance when those notes roll over. They will not be able to pay the coupon for the new replacements, and they also won't be able to pay off the principal. And the result of that is Chapter 11. And the bondholders the new stockholders, and the stockholders end up with zero. The bad part of that outcome is that the same thing happens with governments, and in fact, we're already seeing that happen in places like Illinois, where they've got a pension system that is ridiculously underfunded. And so their attempt is going to be to tax anything that moves, and especially anything that's nailed down like property that can't move, in an attempt to pay these obligations. And as the Chicago Fed, in fact, just came out with a quote unquote proposal to levy a 1% property tax, which, by the way, is about a 20 to 25% increase for the next 30 years. Of course, the problem with doing that is anybody that's ever sold a zero coupon bond, and that, by the way, would include a lot of Federal Reserve banks, right, knows that the discounted cash value of a piece of whatever is immediately adjusted by the forward projection of this tax increase. And so you take your $100,000 house and you make it into a $75,000 house on the day this tax is passed. And then what happens is that the property owner goes to the assessor's board and says, oh, by the way, I'm not paying $1,000 in additional property tax because my house isn't worth $100,000, it's only worth $75,000. And so then they come up short on revenue and they try to do it again. This, of course, is fiscally unsound. Mathematically, it can't work. So I think from a defensive perspective, you have to be looking at of the companies that have this pattern that you've noted, and it's a very solid long-term strategy, you need to look at how much of that has been driven by the ability to finance operations at ever lower cost.
Couldn't agree more.
And to the extent that there's any of that in the price is going to go down to remove that entire influence. There are an awful lot of companies out there that have essentially turned their businesses into annuities. One of the more stunning ones and one of the more stunning success stories in terms of stock price has been Boeing, which historically has always sold airplanes. And then a number of years ago, they decided to essentially try to annuitize that and sell subscription models on their avionics. And of course, General Electric did the same thing with engines that go in the airliners. And everybody thought this was fantastic. Well, look at what's happened to GE over the last year or so as this model has started to deteriorate on them. This is going to happen to all of these companies that have turned to this model as time goes on. And so I think the wise person today says the easy money's been made. You want to look for the companies that have been overlooked and haven't gotten anything out of doing this over the last number of years, especially the last 10 years, or even have seen business conditions deteriorate as other people have outcompeted them by doing this because their executives have been conservative in not adopting that kind of model, and say that's where I want to hide because they're the people who won't get hurt so bad.
Yeah. It's very true. And Apple is going to spend $100 billion, which it does have, on buying back about 12% of the share count. And it seems to me, and it not only to me, but I've listened to 8 hours of the annual shareholder meeting for Berkshire, and Charlie Munger was talking about the fact that companies are buying so much of their own stock in the last few years because CEOs have a very tough time allocating capital into other productive activities. He said that the world has gotten so competitive, so complex, so universal that it's very hard to outcompete. And so if you can't outcompete, you can use cash or debt, cheap debt, and buy back the count, and obviously you make better earnings per share. But this is not a sustainable economy, obviously, doing that. So it's very true what you say, and it's very important for people to look at their portfolios, look at which CEOs have done that, have used the benefits of cheap credit to make earnings look better, and decide whether or not the company can actually grow organically and not using debt. So it's a very astute observation, and obviously we've seen that in the last few years with the giant oil companies like Chevron and Exxon that had to sustain their dividend payments using debt because the revenues weren't coming in, and now they've kind of corrected that with oil prices being much better than 2-3 years ago. Carl, talking about Buffett, along with Jeff Bezos and Jamie Dimon, the three companies have combined together trying to revolutionize one of the I have no other word than to say one of the hardcore American industries that needs a shakeup, and that's the healthcare industry. The costs for healthcare as a percentage of GDP are absolutely abnormal. Why is treatment so expensive in the U.S., and are there any other problems in the Western world that you're seeing that are inefficient in the way that healthcare helps people with their ailments, in your opinion? How do you see this problem overall, the healthcare problem, the costs, and everything that has to do with the healthcare industry?
Well, healthcare is expensive in the United States because it's a scam and it's illegal. In fact, essentially every healthcare provider and firm in the space, and I don't care whether they're insurance companies, doctors, physicians, groups, hospitals, pharmaceutical companies, every one of them is violating because they're all violating 100-plus-year-old antitrust law, every last one of them. And there have been no prosecutions. To the extent that they can't manage to get this by colluding, they go to Congress and lobby Congress to get them to pass exemptions that make illegal conduct that would break their monopolies. I'll give you an example. So you have this drug Sovaldi, which when it was first introduced, it was one of the few breakthroughs that's ever occurred in modern medicine. Okay, normally the way modern medicine works is, and in fact, Goldman Sachs has actually come out and said this recently, which was a stunning admission. I've been aware of it for an awfully long time, and I used to deal with this ramping cost problem when I was running an internet company in the 1990s, and I realized that it was eventually going to destroy my firm and everybody else's if we didn't get a handle on it. It's one of the reasons I got so interested in it, 25, 30 years ago. And what they did was they came up with a drug that actually cures hepatitis C. Now, the typical medical model is you don't cure anything, you come up with a management plan. So HIV, for example, there's no money in curing HIV. There's a lot of money in making it survivable for 50 years, okay, because you have to keep taking the drugs. So this was the same, right? So this is the same thing, but Sovaldi is a 90-day course of treatment, and when you're done, in the vast majority of the patients, you no longer have hepatitis. Okay, now that is a revolutionary treatment. It's something that hasn't been done in modern medicine in 30 years, and so the company came out and priced it at $90,000, $1,000 a day for 3 months worth of pills. All right, that's an oral medication. You pop a pill every day. All right, so here's the problem with that. The drug is not expensive to make. It's a relatively modest molecule in terms of the complexity of constructing it. So India, among other places, they just don't have $90,000 per person to treat with this drug. So in those countries, you can go and you can buy this drug from the same manufacturer for $1,000 for the entire course of treatment. Now that's almost 100th of the price. All right, made by the same firm. Now, you would think in the United States that the simple solution to this is that I, as an entrepreneur, am going to buy an airline ticket to India. I'm going to go to New Delhi, and I'm going to take 2 suitcases. One has clothes in it, and the other one I'm going to buy as much Sovaldi as will fit in the suitcase and pay cash for it. I'm going to get back on the plane. I'm going to come back to the United States and I'm going to sell it. and the minute that starts, the price isn't $90,000 in the U.S. anymore, okay? Because the free market takes care of this problem with arbitrage instantly. So very quickly, the price falls to the cost in India plus a markup to cover your cost of the airline flight, and that stops this. So what the drug companies did was go to Congress and get a law that actually makes that felony. If I go to India and I fill my suitcase full of stuff and come back, I get arrested. I go to prison. And this is the drug reimportation thing. Now, that's illegal. All right, to place those kinds of restraints on commerce without an act of Congress would be against the law. To conspire to do this kind of thing is illegal. The only people who can violate antitrust law and get away with it and not go to jail is, of course, Congress, because Congress makes the laws. So they bought this protection. Now, what this has allowed the drug companies to do is essentially rip off everybody in this country. And it's not just drug companies. You take a look at a hospital, for example. Go to a hospital and ask them, how much to take my appendix out? They will not tell you. But they know, because every single procedure, every suture, every scalpel, every bag of saline, everything that they have in that hospital is in a computer program. It's in a database, just like it is for every other company in the world. It's called the Charge Master, and every hospital has one. But the reason they won't give you a price is because the answer is, how much can we screw you for, and what kind of insurance do you have? So this kind of collusive activity between medical centers is a felony. read 15 United States Code Chapter 1. You will see there that the mere attempt to monopolize restrained trade or fix prices is 10 years in the can for every person involved and $1 million an instance for every corporation that tries it. You don't have to succeed, you just have to try. It's been illegal for over 100 years. There have been 0 prosecutions that have been brought over this. So if we were to simply enforce existing law, and by the way, Donald Trump could do that because the executive enforces laws. Everyone says this is an intractable problem because of the lobbying and Congress, and you can't get Congress to do anything about it because, of course, the lobbyists run around the halls. The problem with that argument is that the executive can enforce any law that is already on the books, and there's absolutely nothing Congress can do to stop it other than try to change the law. So Donald Trump could tell Jeff Sessions tomorrow, you are going to bring these charges, and if you don't, I'm going to fire you and replace you with an attorney general at will, because he's Jeff Sessions' boss. And the Department of Justice is the one that brings antitrust charges. I mean, that's the cops. They bring antitrust charges. So he could do this. He hasn't. Barack Obama not only didn't do this, he expanded the problem with Obamacare. And there is no solution to this problem until this happens. Now, there are people that have said, well, how big of an impact would this be? And I say it's an instant 80% decrease in the cost of medical care, which means you don't need insurance anymore in the United States, except for truly dramatic things like cancer. And they say, well, 80%, you're crazy. I said, no, I'm not. Go look up online a place called the Surgery Center of Oklahoma. They are a cash surgery center. You pick your procedure. They give you a soup to nuts price. And by the way, that includes complications. So if they screw up and give you an infection, they eat it. They don't get to bill you any extra money. They eat it. What you will find is that their prices are about 1/5 of what you pay in a traditional hospital for the same procedure. You can go have a bypass done for under 10 grand. Now you tell me, if you were going to die and had a heart condition and you needed a bypass, even if you were middle class or relatively poor, you could probably find a way to finance $10,000. You can't find a way to finance 100 if you have very little in the way of assets. But you could find a way to finance 10 grand. Most people that are supposedly poor in this country are driving around in cars that are worth more than 10 grand. So this could be done quite easily, but you would have to break the monopolies. And that's the only way this problem is ever going to get solved. And the reason it isn't done by the politicians is because we have added so much. We've gone from about 4 or 5% of GDP for medical care in this country to almost 20 over the last 30 years. If you fix this, it goes back to 5%, and we have a economic recession that is formally a depression because the definition of that is a 10% contraction in GDP. It doesn't last for very long because all that money gets reallocated into productive things in the economy. But whatever political group is in office, whether it's in Congress or the presidency or whatever, at the time that happens, they're going to get blamed for it. And there will be millions of people who are currently not providing a single second of care to a single person in the medical system. They're all administrators, they're paper pushers, but they're all making 50, 100 grand a year, and every one of them is going to lose their job.
Well, that is very thought-provoking for sure. I want to switch gears altogether and ask you, Karl, if you think there's a war in the Middle East that is likely, or is there too much to lose on both ends for this to escalate any further?
Well, I hate at times being someone who has read a great deal of history. This is one of those times. There has been a general conflict, which is unfortunately religiously based, has been going on for over 1,000 years. And I think we all know exactly what I'm talking about. It's, people like to blow up planes and, fly them into buildings. They are not going to quit because that is their way of looking at things. You have to remember that Christianity had this same problem 1,000 years ago, and Christianity grew up. We stopped cutting people's heads off if they didn't convert to Christianity, and decided that that was not the way to live. Unfortunately, there are people who haven't decided to do that in this world. There's a lot of them, not by no stretch of the imagination are the majority violent, but it doesn't take a large percentage. If you've got 1 billion people that follow a particular path and 1% of them are murderous savages, you've got a huge problem, right? I mean, there's 10 million people that want to kill you and are willing to do it. This is the history of that part of the world. And it's also the history of Europe. And people have, I have to say this much. Germany and the other nations in Europe that forgot what happened with the Mongol invasion and the Crusades and what had to be done in order to put a stop to it are going to live it again if they don't cut this out. And they are headed down the same road. There is plenty of history throughout time that tells us what happens when you allow this kind of ideology to go on and continue and foster and grow. And we're doing it again. I am very, tell me when there's been a 50-year period in the history of the Middle East where there's been peace. You can't find one. And it's a big problem in Europe too. We have in the United States, we have this backwards view of this because we have had white people, Caucasians, if you will, in America since the early 1600s. Okay, so it's been 300 years or so, and we've had 2 violent revolutions, one of which was successful that led us to becoming the United States of America when we threw the King of England out, and the other one, which was the Civil War, which was unsuccessful for the protagonists, and yet that's 2 instances in about 300 years. It works out to about a 0.5% per year risk. And you think this is no big deal, but the reality is that over a adult lifetime, there is a 27% chance in the United States that you are going to need a military rifle, ammunition, and magazines because something like that's going to happen during your lifetime. 27%. Now, to put some perspective on this, that's higher than the risk of your home being flooded if you live in a 100-year floodplain during the time of your 30-year mortgage. So this is not, this is not crazy land stuff here. This is reality. In Europe, you're actually odds on due to their history of wars. Depending on which starting year you use, the reasonably conservative number that I came up with is a 74% chance during an adult lifetime that you will need to repel invaders of some form with violence. And your alternative is you're going to be dead. So, I mean, when you think about 74%, that's very high over a person's adult life. I suspect that in the Middle East, the odds are at least that high. And those odds stink. Okay. I can't put it any other way. I mean, it's a 74% chance that you're going to have some kind of violent uprising that forces you to defend yourself during an adult life in most parts of the world. People don't think that that's what reality is, but it is just basic statistics. I mean, it's this is stuff you ought to learn in high school, but nobody does.
I was born in Israel, so I kind of know a little bit about the military. I want to ask you about the tax cuts that occurred in the U.S. during the last few months here. Is this a smart time to cut taxes, or was this something that had to be done 6 or 7 years ago, and right now it will have a short-lived effect of stimulating, but on the flip side, it might generate higher levels of inflation, whereby the average tax cut is going to benefit the American family around $110 a month, according to the latest release. And obviously, if oil prices and food prices go up a little bit, that $110 is going to be eaten away, and this will be again a stimulus only for the rich. Tell me a little bit about your opinion on this.
Well, we are insane fiscally in the United States. Okay, that's the best way to put it. We have 535 nuts between two houses of Congress, and then we've got 9 more that sit on the Supreme Court, and we've got a handful in the executive branch that are crazier than the 535, which is that seems impossible, but it's true. And by the way, Mnuchin, sitting in Treasury building, is chief crazy. He's so cray that he's worse than Hank Paulson, which is really saying something. Then again, so was Obama's Treasury. So I mean, it's a ongoing problem. The issue is this: when you run deficits as a sovereign government, in other words, you're a government that issues its own currency. When you run deficits, that is inflation. At the moment that the deficit is run, it is monetary inflation. It occurs instantly as soon as you issue bonds because you're increasing the money and credit supply in the economy. And when you do that, that is inflation. That's Milton Friedman's classical definition. Inflation is always and everywhere a monetary phenomenon. Well, guess what? That's what's been going on. So when you cut taxes, and you do it not because you have a surplus. Okay, if you're running a budget surplus and you cut taxes, then you bring the budget into balance by giving the money back that you don't need. There's nothing wrong with doing that. Co-ops do it all the time. They have an excess profit, they distribute it back. It's the same concept you have with a dividend out of a corporation, right? The problem with doing it when you borrow to do it, though, is that gets sucked right back out of the wallet, and there is not one person in 100 in this country who understands that, but they're seeing it now at the gas pump. They're seeing it at the grocery store. So you got your $100 a month in decreased taxes, but you paid the $100 filling your tank up to go to work. Last time I checked, that's a zero. Okay. So this is, and you cannot control where the inflation will show up. It may show up in asset prices, which some people, of course, like a great deal. But it also tends to show up in places but it also shows up in places that aren't assets, which is not so good. But it happens instantly. Under the Obama administration, we ran over $1 trillion a year in deficits, which were largely based upon the government funding every bailout it could find, handing out a lot of money to people who were out of work. That one was potentially defensible. The funding every bailout part was not defensible. The cost of doing stupid things is you're supposed to go bankrupt. And then on top of that, they structurally changed elements of the economy, including healthcare, in ways that put hundreds of billions of dollars of ongoing expense into the system. What Trump has done is taken none of that back out, but added to it a lowering in revenue by reducing taxes. So the problem is that when you look at the budget, you look at where the money actually gets spent, and this goes back to the point I made previously about healthcare. Everyone likes to say entitlements are the problem in the United States, and they always lump Social Security, Medicare, and Medicaid in together. And the reason they do that is because they don't want to deal with the facts. Social Security is not insolvent. It will not be insolvent. The surplus that has been built up in treasury, in non-marketable treasuries over the last 50 years will get spent down. But the system was designed that way on purpose, because when you have a baby boom, you will have a lot of people working for a while. They will pay taxes in excess of what needs to be paid out. And when you have a baby bust, you will spend that down, but those people will die. So you retire at 65 or 67 or 68, and then when you get to be 80, 85, you fall over dead. And you're not taking money out of Social Security anymore. The problem is that Medicare and Medicaid, Medicare was put together with a 2.x% tax on the expectation that it was 5% of GDP. But medical spending is now 4 times as large. The tax isn't 4 times as high. So it is underfunded by 75%. And it is growing between Medicare and Medicaid. The escalation is running about 8.5% to 9% a year on a compound basis and has been for 30 years. It's going to bankrupt the country. And you can take everything else and zero it. The discretionary budget, the defense budget, you zero the whole thing and not solve the problem. If we do not fix the healthcare scam within the next 5 to 10 years, we're not going to have a nation left. We're going to end up like Venezuela.
Very interesting. Karl, I want to have a second part of this interview in order to make sure that we split the time up. I love our discussion here, and I really want to make sure that people have two parts to this, because I have a bunch of other questions that I want to run by you. And so I want to really thank you for coming on the show, and we'll definitely do another part 2 as soon as possible. Could you tell people a little bit about how they can follow your work and read your commentary, and where they can find you online, on Twitter, or everything else?
Sure. I'm on Twitter at TickerGuy. And you can find my daily column at market-ticker.org, not com.org. I don't have the com name. I couldn't get it. But there is normally a couple of articles a day that go up there. It just depends on what's going on at any given point in time.
Karl Denninger, thank you very much for taking the time today.
Thank you.